Hooty hoo, all my stock market gamblers. Welcome today. It's Fed Day. The Fed is going to announce interest rates in probably about 1 hour from now. I'm recording this before the Fed announces the rates. You'll be watching this after. What am I expecting? Well, I'm expecting the 50, maybe 75 basis point increase, but I'm expecting them to raise interest rates. Okay, now what will this do to the market? Well, it's going to create volatility. We may get an initial pullback and then have a run-up. Or we may get a big run-up and then have a pullback. Either way, it's going to create a lot of volatility in the market. On Friday, we got options expiration. That's going to create volatility. Now, a lot of people are calling for a crash in the market. They think that this is just going to continue to go down. I don't think so. What we've had is kind of like, let's just call it a slow bleed out. Okay, it started back in January, and now here we are in June, 6 months later. Right? And what's the NASDAQ down? About 30%. The S&P down about 20%. So the NASDAQ, let's take the NASDAQ, about 5% a month for 6 months. Now you've had this slow bleed. The stock market doesn't usually crash after a slow bleed. No, the stock market crashes and then you have the slow bleed. So I don't think we're going down much farther from here. We're kind of trying to form a bottom. We're looking at where the bottom is. Now there's these things called Bollinger Bands, right? Now Bollinger Bands kind of, they're one on top, one on bottom, and right now we're below the bottom Bollinger Band. Actually today we're having an up day. Dow up about 150, NASDAQ up about 150, has pulled us inside of the band, but we're at the lower end of this, this trend line. We could break a little bit lower. I'm not saying we can't. We're trying to find the bottom right here, but I do think that the short covering rally is coming still this month. Look, we're halfway through the month. What are we at? June 15th today. Okay, so we're halfway through the month. Now, by the end of the month, I do think we're going to get that short covering rally going back up. Now, today is going, I just think it'll be volatile when the Fed announces today. I do. I think the market, it could spike either direction, up or down. And I think Friday is going to be a volatile day. But I do think this week will be the end of that volatility, and we're going to start the short covering rally. Now, will we start it today? Will we start it Friday? I have small positions on. Small because I expect that there's going to be that volatility, and maybe I can increase my positions with a big drop, right? Because I want to play that rally. I want to play that short covering rally up. That's just my opinion. There's a lot of fear in this marketplace right now, and I get that. I get that there's fear, and a lot of people think it's going to go lower, and maybe it can go a little bit lower. But I just believe that they're going to push this back up. I believe they're going to push it up to 5,000 on the S&P. 5,000. Right now we're about 3,800. So I think we're going to have a big short covering rally. We'll see if I'm right. All right, so let's move on to the real estate market. Now the real estate market is fascinating to me. Look at interest rates have just spiked 6.2% yesterday when I checked. 6.2%. Now, okay, now a lot of people think, well, that's bad. Well, that's pretty normal. Normal's about 6%. Let's call that normal, right? When we were down at below 3%, that was abnormal. That was the Federal Reserve holding interest rates lower. But look, we've only gone up, what? They've had two rates announcements already. We were up around 1%. Why did interest rates go from 3% to 6%? Well, here's what a lot of people don't understand. There's mortgage-backed securities. When you get a loan from the bank, they create what's called a mortgage-backed security. They bundle a bunch of the loans together and they sell these to Wall Street. Well, that's interesting, right? Okay, so Wall Street's been buying these mortgage-backed securities. Well, and the Federal Reserve started buying these. They were buying $40 billion a month of mortgage-backed securities. Well, they had this auction for mortgage-backed securities just last week, and there were no buyers. They had to keep raising the rate so that people could buy. They didn't have any buyers because the Fed is now selling 40 billion of these. No one is buying the mortgages. So the mortgages have spiked from below 3% to now 6.2%. And it's not done yet. Why? Because there's no buyers for mortgages at this rate. Investors want more return on their money. It will not shock me if we hit, 7% in July, maybe even 8% in August. But by this time next year, we're going to be sitting, probably over 10% for a mortgage, over 10%. Now, I know a lot of people think that this won't do anything to the house market. This will probably make the house market go up because everybody will want to buy more at 10% than they did at 3%. I'm telling you, a lot of cities are already, the equity is getting vaporized in these cities. They're down 20% already, 15, 20%. Now, I know not in your area, and I know if we go up to 10 or 12% on mortgages, your area is still going to stay up. Everyone's going to keep buying. I don't think so. Here's the thing. Okay, so like I talked about the Bollinger Bands in the stock market, one up and one down. Okay, anyways, in the real estate market, they have what's called the mean, the 100-year average. Okay, so 100-year average, it's a slow slope up. But if there were Bollinger Bands for this 100-year average, we would be way above the top Bollinger Band. What that means is we're going to revert back to the mean. We're going to come back down. And to revert to the 100-year mean, we got to come down by 50% just to get there. Now, we may overshoot it to the downside. We may come down 60, 70%. Just to get down to the 100-year mean, houses will have to drop 50%. Now, a lot of times when you're dropping like that, you're overshooting. Now, some people say, well, Mike, these businesses, you got BlackRock, you got Blackstone, they're just going to come in and buy these things. Now, look, businesses are not that dumb, right? They want to buy them now because houses have been going up and businesses have been buying them. But as soon as houses start to go down, these businesses, they back out of it also. They don't want to lose money. They got to answer to their shareholders. So I don't think these businesses are just going to come in. They say they're going to come in, swoop down, buy these, and then raise the rates, raise the rental rates. Well, rental rates are fascinating to me. Okay, so I used to be in the landlord business for many years, and I always wanted to charge that top dollar. I wanted to keep raising the rates. Do you know as you keep raising the rates, the worse the tenant you get the worst tenants possible, the higher you raise the rates. Now, how do you pick a good tenant? A lot of people would say, well, they fill out an application, a rental application. That's not how I do it. I learned this long ago from my economics teacher. Here's what he taught me. Now, he manages about between 30 and 50 of his own properties. He's a very wealthy gentleman. But here's how he rents his properties. Anyways, when they come to rent, he has one thing. He does have them fill out that application, but he doesn't care about that. He makes them give them 3 names of people that will vouch for him. 3 names. Just give me 3 names of people that say you're a good person, that you're going to pay your rent. He actually called those people. He goes, do you know Billy Bob? And they go, yeah, I know Billy Bob. Is Billy Bob going to pay his rent? And they go, oh, Billy Bob's a great guy. He'll pay his rent. Well, if Billy Bob doesn't pay his rent, would you consider paying it for him? Well, no, I'm not paying Billy Bob's rent. You don't want to know about Billy Bob. He drinks. He's a bad person. He owes me money. I'm not paying his rent. You get to the bottom really quick, right? So that's what happens. Now, what he also does is he walks out with them at the end of the interview, and he looks at their car. He walks out to their car with them. People will take care of their car exactly like they're going to take care of your property. These are 2 secrets that if you ever get in the rental business, they will save you a lot of headaches. Yeah, you can fill out the application. Yeah, you can check the credit score. But you get 3 people to vouch for them. You go take a look at their car. Much better way to select a tenant. Just a little food for thought there. That's how we do it around here. Okay, so moving on. Now, what about this real estate market else is going on? Well, let's talk about Redfin. Let's talk about Compass. I think they're both laying off about 10% of their workforce. But that's not the interesting part to me. See, Redfin, they're the guys that come out and sell houses for 1%. I'm a broker. Look, I'm not selling any house at 1%. It's not worth my time. It's just not worth worth it. But Redfin, they do it. They're agents, and then they split it with their agents. Agents get like the 0.5%. They get a 0.5%. You can't make money at this. And Redfin's proven that. Their stock was at $100. Now it's down at $8. It's lost 92%. That's got to hurt, right? Well, their business model's broken. You can't sell houses at 1%. But they're laying people off. They have no work for the agents anymore. Now let's talk about Compass Real Estate. I warned about them when they first came out. Compass came out. They went public at $22. They're down to $4, right? That's an 80%, over 80% drop, right? So if you bought them the day they came out, 22, now you get $4. And that was just a year ago. Personally, I'm amazed they haven't gone BK yet. I think they will go bankrupt. They had a flawed business model. What they would do is invite all the top agents to come work for them. And they say, Mike, how much? Oh, I wasn't a top agent. I never got the offer. But they call up the top agent and go, how much commission do you bring in? Well, I bring in $500,000 in commissions. They go, great, we'll pay you $1 million in commissions. In other words, they were paying above what the agent was actually bringing in commissions. It wasn't it's just a business model that doesn't work. But when you got venture capital money to burn through, you can recruit all the top agents. Well, guess what? They're laying people off now because the business model's broken. It's kind of was like, I'd call it a legal Ponzi scheme. So they dumped this on the unsuspecting public because their revenues were going up, right? They were bringing in the commissions, but they were just bleeding money because they were paying the agents more than they bring in commissions. It was broken. I warned people about it when it's 22. I'd tell them, don't buy, don't buy, don't buy. Now, I kicked myself because I didn't go short. I didn't short the company, but they're down to $4. Look, they're laying off. Because why are they laying off? Well, we're headed into that recession thing. We'll see how it plays out. There's a recession coming. Yeah, so a recession, you get layoffs. People can't afford their mortgages. Anyways, what's happening when you go to 6.2% is just the equity's just being wiped out. Now, not in your area. They're still selling, but I'm telling you, they're coming down. They're coming down. They're coming down. It's just the way it works. I'm telling you, that's what's happening right now in the real estate market. Now, in the stock market, let's get back to that for a moment. Fed's coming out probably about a half hour from now. I'm very excited about it. That's why I got this video done early. I want to see what the Fed's going to do. I want to see the volatility in that market. If it really drops, maybe I take my small positions and add a little bit to them. I got some firepower sitting on the sidelines right now. We'll see what happens. Now, we could just spark up, and that's fine too. My small positions will make me a little money. But I'm kind of hoping actually that we get that drop first before we get that short covering rally. But we've had a good drop. Don't get me wrong. I thought the lows would hold. The lows did not hold. We're down a little below them. This is a bottoming process. We're making a bottom, right? And so we get that low below it, and maybe we even go a little bit lower. But we're bottoming out. We're at the bottom. We're not getting ready for the crash. A lot of people think that the crash is still coming. No, we've just had the slow bleed out. 30% NASDAQ, 20% S&P. They're going to pump this back up, and then the big crash is coming. That's when you should be worried about the big crash. Right now, it's not time to worry. Everybody's worried right now. I get that. But it's not the time to worry. We're going to pump this up. They're going to throw everything they can at it. Take my word for that. That's just my opinion. Of course, you do your own research. Anyways, I got on a little roll here. I'm Tall Mike. Get out there. Have a great Wednesday. Don't forget to give me the thumbs up, though. It's Fed Day. It's a good day to give me that thumbs up. We'll talk again real soon. Bye-bye now.